All right, guys, we're going to go ahead and kick this off and get started. So I want to welcome everyone to today's webinar. My name is Shannon Robnett. Thank you for being here, and a huge welcome to our guest today, Collin Sellers. Good morning, Collin.
Good morning. Thanks for having me, Shannon.
So Collin, take a minute and introduce yourself. I'd like people to understand who I have as my co-host here and who's got the information and what kind of information we will be being able to get from you based on your background and what you've done.
Yeah, absolutely. Collin Sellers. I work for a company called Versalo. I'm the VP of Solutions Architecture here, which means I work with our customers to make sure that they have a firm strategy and understanding of our technology and in place so that they can make the most out of what it is we do. What it is we do is that we are a next generation transfer agent and blockchain enabled platform. So we help companies to build businesses on top of blockchain, specifically within the realm of fundraising, capital markets activity, managing your cap table, so then your investors who've come on board, who have invested in your products, your offerings, as well as managing the equity life cycle through from primary fundraising all the way through to secondary liquidity. So we, as a transfer agent, regulated entity, we're able to maintain the ledger for your private assets, and we do that on blockchain. And this allows us a whole bunch of really cool features and functionality. It allows us to give you, our customers, that functionality within capital markets players. So this is connecting with exchanges and digital custodians, and there's a lot that can be done on top of blockchain. Blockchain is just really the database.
So let's talk about that for a minute, Collin. So you have the database, and a lot of people, I know that when I first started down this rabbit hole, I got confused a lot with, blockchain and cryptocurrency, right? I mean, and a lot of people confuse that, right? I mean, explain to us real quickly what the difference is between blockchain as far as what the technology is and what cryptocurrency does on top of that.
Absolutely. So the original cryptocurrency, of course, is Bitcoin, and Bitcoin is powered by blockchain technology. What blockchain is it is a decentralized, immutable database. It's a ledger of information. It's decentralized, meaning it's written down in a lot of places, not just in one place, right? So we say, Sony was hacked, Home Depot was hacked. When you have a central repository of all your information, that can actually prove to be a vulnerability. So what blockchain does is it writes it down in a lot of different places, and then it has what's called a consensus mechanism, which we don't need to go into the weeds, but it has the ability to verify that all the transactions occurring are all legitimate. And what it means is that there is no central point of failure for this database, this information. There are lots of different blockchains out there. Ethereum is one of them that a lot of people build apps or decentralized applications on top of, but there are a whole bunch. Cardano and Solana and all these different chains now that exist for the purpose of building on top of. But what the blockchain really is fundamentally is just the database. That's where we write the information.
So it's funny because as we're involved with our syndications and we're involved in financial transactions, the reality is there's not a lot of transparency in what I did with the money, what I did with the distributions, who has what shares. And that's all been done old school, written on a piece of paper. We exchange copies. You have a copy. I have a copy. And there's nothing there that makes anything execute on its own. It's all dependent on me staying alive, remembering that on this day I'm supposed to do these things according to the contract. And that's the way we've been doing it with fundraising, syndication, investing kind of things. What is it that we're able to do when we involve blockchain and some of the other technologies that are being brought to the mix that create that transparency that actually creates a consumer safe environment?
Absolutely. It's a great question. So the blockchain, because it's decentralized and public, it means that multiple parties can access it. So it serves as the database for all this information. But really what we're talking about is the ability to execute what are called smart contracts. Smart contracts are basically triggers that you can build on top of blockchain, and it allows us to say, if Shannon does a distribution to his investors, then it should produce a report based on the inputs that he put in there. That's just one example. This allows for a lot of transparency with your investors and those that are inside of your company, because instead of needing to trust you or whoever is involved in the transaction, you're able to actually wrap up those rules into a smart contract, and you can take a look at what they are and exactly the parameters that govern them. But you can trust that, well, the rules are written to the blockchain, which is immutable. It's not changeable. It's not hackable. And the blockchain is the database where we're writing all this information down. Therefore, I can trust that anytime Shannon does action A, I'm going to get result B, or what have you. So it ends up being a really wonderful way to transact and provide transparency to your investors.
And then when you talk about who you are as a company, you're an independent transfer company that keeps the cap table, which is the centralization of who all's involved in the deal, right?
Exactly. We're a legally regulated entity, regulated by the SEC. We got our letter of effectiveness November 2019. And so we maintain the cap table for companies like you. And then what we do is we put that information on the blockchain.
So basically I have the blockchain, which is distributed between a bunch of computers. So it's immutable. And then on top of that, we're using your technology here that has the capitalization table as to who owns what shares of what. So really we have two independent sources outside of the syndicator who are authenticating the information back and forth. And if I were to put a distribution into this system, it would be distributed based on the smart contract, not based on my human input.
Exactly. What my CEO refers to this as is triple entry bookkeeping, because it would be recorded by you, it'd be recorded by us, the transfer agent. Legally, that's our role and our responsibility, and then it would be recorded on the blockchain as well. So you'd have no opportunity but much more difficult for bad actors to get away with malicious behavior.
So then the other thing that you have is, I mean, if I wanted to, and not that this would ever have happened, right? But not that somebody couldn't change a contract and say, well, your contract is different than mine. It's been 5 years. How many people actually have their contract after, when they go to exit? We're trusting that the syndicator has that. But when you're putting it out there on chain, you're putting it out there for anybody to see. So I don't even have to be part of the deal, and I can read what people involved in the deal have, what their percentage is, what their capitalization is. Can I find all this information online? Is it all available?
Yeah. So great question, because there's a privacy component here to your investors and your syndicators. And so one of the great things about the blockchains as well is that the information is encrypted. The encryption, it's actually hashing of Bitcoin is called SHA-256, or Secure Hash Algorithm 256. We don't need to get into the weeds on what that means, but this allows us to take the information, maintain the privacy, and the only people that have access to the actual data behind the encryption are those that should. In this case, the transfer agent, you, the issuer, and then the investor. It allows for us to obscure that which should be obscured, because again, we don't want to take information about the investors and blast it out to the public, right? That would be a violation of privacy. But rather, we're able to maintain that ledger, that's the blockchain that's decentralized, allow access to other parties, but only those who have the requisite access will be able to see it. To everyone else, it just looks like a hashed address, right? It's private, and we can maintain that.
So if we were to look at over here, the list of our participants, we've got Ben and we've got Donald. And Ben and Donald, let's just assume that you guys got into one of our syndications. By the way, congratulations on an excellent investment. I'm sure this investment vehicle will serve you very well. So Ben would be able to see that Donald got the same deal that he got.
No, actually he wouldn't, which is the whole point. So Ben would be able to have his privacy, and Donald will be able to have his privacy. Now, if they talk to one another, of course, I'm not going to obscure that. But right, I love the point you're knocking on here, which is the only people that have access to the data are those that should, right? So if a broker was involved, right, of course, the broker would be able to see their slice of the raise. We're very careful about how we would manage that sort of syndication and move that out to multiple parties. But yeah, very, very important that we maintain the privacy here, especially when we're talking about investment vehicles.
So now that we've established why someone would really want to do something like this, I mean, everybody hears about blockchain and they hear, it's this and it's that, and everybody uses it to buy black market cigarettes and trade in, I mean, you hear all the horrible things, right? It's for money laundering and
Right. And whatever else.
nefarious things. But the reality is it really is a double check, a triple check, but it's also, putting things into motion that regardless of what happens to me, I mean, if, I get hit by a bus next week, this thing is still going and it will still have the smart contract, which is really just a program trigger here and there where it needs to be. But then that's just the vehicle. I mean, that's just the setup of what we put together. What is it that you built on top of that allows this to be such an investment friendly deal? And then what does that do for syndicators and investors to produce additional liquidity?
Absolutely. This is, I really appreciate that, Shannon, because at the end of the day, tokenizing a piece of real estate or privately held equity or whatever, just for the sake of tokenization, it's cool. It might serve a marketing function, but really what we're talking about, the problem we're trying to solve is the problem of liquidity, and particularly liquidity in the private markets. And I'll give you some figures. Public markets raised $1.4 trillion in capital in 2019. And they had $33 trillion of annualized trading volume. Okay, so that's a lot. 2021, I'd be willing to bet annualized trading volume is north of 40. I wouldn't be surprised. Now, private markets raised double the amount of capital in a primary raise. So it was about 2.9 trillion. But they saw only 0.1 trillion in annualized trading volume. So let me give you the punchline, which is to say that private markets raised double the amount of capital, but are 330 times less liquid. That doesn't make any sense to us.
So what you're saying, Collin, is the big boys, they raise 1 point whatever trillion and they trade it 40 times in a year.
Yes.
I mean, by the numbers, right?
By the numbers, absolutely.
But as private equity, we're investing in a deal. We're sticking in the deal. We're there for 5 years. We are illiquid. We're not able to move. Part of that has to do with the SEC and the requirements so that we don't use our funds to do those nefarious things like money laundering and things like that.
Sure.
But why else is it that we're not moving?
Right. So really, there hasn't been the infrastructure to be able to do this. The SEC, you mentioned, there's been some issues, or not issues, but rather question marks from the regulators as to how these things will behave. But really what we've seen under the rallying flag of blockchain technology and liquidity, honestly, that's what we're talking about, right? How do we get liquidity for private assets? We've seen the market come together, and really there are three participants in a private equity, privately held private asset trading scenario. Vertalo as the transfer agent is one of them. We maintain the data. You have what's called an ATS, which is the exchange. You can't call it an exchange, but for form and function, that's what it is. It's where the actual order matching happens between buyer and seller. And then the custodian, which is where the cash is settled. Blockchain has allowed us to actually work together and bring those three parties together in order to make markets for private assets. And it's really, really exciting because, again, we have all of this annualized trading volume in public markets and next to none in private markets. And that just doesn't make any sense. The numbers don't work. We're raising more money privately than we are publicly, right? IPO and M&A, whatever's going on in the public markets, we're raising more money over here privately. And so what Vertalo is doing with companies like My Vertical Equity and the players in the space is we're working and we're creating markets for previously illiquid assets, so that your investors can get liquidity, right? I mean, you mentioned, Shannon, you hit the nail on the head, right? If I'm an investor in a piece of real estate, I come on board, my term is going to be 3 or 5 or 7 or 10 years. Well, life happens. Your kid broke his arm, you're going off to college, you got health stuff, whatever it is, and you need that liquidity. Vertalo's technology would enable you to take your ownership that has been tokenized on the blockchain. Again, smart contracts that govern how all this work. Take that ownership, take that token that represents the ownership in the real estate, take it over to an ATS, which is a regulated broker-dealer exchange, find a buyer, sell to that buyer, get your cash out of your liquid at any point. You don't have to wait for the 5-year term. You have to wait for the 7-year term. We can actually enable that via blockchain technology, and we're doing it right now.
And I could tell you guys why a syndicator wouldn't want to do that, because if every time somebody that got into the syndication wanted to trade something, we'd have to keep track of all that record. We would have to write it down. We'd have to have a sale here. We'd have to remember where we're sending the checks to. We'd have to change bank accounts that it was going to. There's all this stuff that's going on. But with the technology and a couple of nicely fitting programs, we're able to absolutely seamlessly transact on this, so that if you wanted to sell a portion of what you purchased last year, you'd be able to do that, and the distributions would follow the blockchain to the end link to pay the buyer, or to pay the owner at the time, right, Colin?
Yeah, exactly. I mean, all three players in that exchange, the transfer agent, the data, the ATS, the exchange venue, and then the custodian settling the cash, we're all working together via blockchain and API connections with one another in order to make sure that activity happens compliantly and also quickly, right?
So you're also, I mean, not only are you following the chain in that I put in $1,000 distribution and you're going to send it out to the right people. You're going to send it to whoever, Ben decided to sell it to, because he and Donald, they saw that, they weren't friends anymore. And so Donald was going to keep his, but Ben was not wanting to be in the deal. So Ben was going to sell his. They would follow that through the chain and they would be able to get to the end there. But now what you're saying is that's settled by a third party. So it's all tracked, not just the syndicator sending out the checks and telling you he did it right. Is that?
Exactly. There are checks and balances and players in this, like you said, third parties in the space that are regulated entities that can assist in this process. And it's all, again, underpinned by blockchain and by the tokenization and the liquefaction, if you will, of these assets. It's really exciting. I mean, this is where we think the market is headed.
Well, it's obviously where I want the market to head, because it takes a load off of me, right? I mean, it puts it,
right.
We're all, I mean, we just launched another syndication today, and it's a great value add office building, and that's great. But the reality is that's a 5-year deal, and we've got all the information now. We're sitting in front of all the technology now. Why not input at one time and have it set up with the smart contract to move off into the future? And then all we have to do is take the distributions and put them into this same machine, the same formulas, the same everything every single time, and it just does what it's supposed to do. So I know why the technology is headed that way, for sure.
Right. Well, and I think you said it too, Shannon. It transforms the nature not only of ownership for investors, but for ownership for you as the property owner, right? Because instead of needing to tell your investors 5 years, you get your capital back, and having to do a recapitalization event at that point, you can tell your investors, hey, we have a seasoning period. Many private raises have seasoning periods, 12 months. After that, it's liquid. If your investors want to get out, go ahead. But you, the syndicator, you, the property owner, can maintain ownership in perpetuity. You can say, I own 51% or 70%, whatever it is. And if my investors want to sell at any point, you got your liquidity opportunity. Go whenever you want to. And it's really interesting how it'll change the nature, I think, of syndication and ownership structures.
So one of the things that we see a lot of people doing is tokenizing single assets.